From CNBC, KKR says China's real estate correction may only be halfway done. Some of the highlights from this article: China's real estate troubles are likely far from over, and industry problems need to be addressed quickly for GDP growth to rise significantly. Based on comparisons to housing corrections in the US, Japan, and Spain, China's housing market correction may be just halfway complete. Some bad news there for China, if accurate. China's GDP can grow by 4.7% this year thanks to growth in new industries, while real estate and COVID-related factors account for a drag of 1.4 points, according to this report. Going on, China's real estate troubles are likely far from over, and industry problems need to be addressed quickly if overall GDP growth is to pick up significantly. And that's from global investment firm KKR, Colbert, Kravitz, and Roberts. Quote, a fundamentally overbuilt real estate industry needs to be addressed and quickly. Second, confidence must be restored to driving savings back down. Going on, real estate and related sectors once accounted for about 1/5 or more of China's economy, depending on the breadth of analyst calculations. The property industry has slumped in the last few years after Beijing's crackdown on developers' high reliance on debt for growth. Based on comparisons to housing corrections in the US, Japan, and Spain, China's housing market correction may be just about halfway complete in terms of its depth. Both price and volume must come under pressure to finish the cleansing cycle, the report said. To date, though, it has largely been a contraction in volume. While KKR's report didn't provide much detail on expectations for specific real estate policy, the author said more action by Beijing to improve China's real estate sector could materially shift investors' perceptions. Amid geopolitical tensions, the country's property market slump and drop in stocks have given many foreign institutional investors pause about China investing. I would also say that you have to factor in the increasingly heavy hand of the government in stepping in with businesses, and in some cases, Chinese business leaders just disappearing for what it seems like extended prison stays for getting on the wrong side of the government. Going on, according to some of our property survey work, many allocators have considered reducing China exposure to 5 or 6%, down from 10 to 12% today, at a time that we think fundamentals in the economy are likely bottoming, KKR said. Much of official Chinese data to start the year beat analyst expectations. I would actually note that even the Chinese don't know how accurate that data is, as officials sometimes provide the data they're expected to rather than necessarily the data that's accurate to other officials. Going on, Chinese officials have said the real estate sector remains in a period of adjustment while Beijing shifts its emphasis toward manufacturing what it considers high-quality development. In fairness to Beijing, real estate is not an investment that really adds to productivity and long-term growth of the economy as other investments, such as in intellectual property, R&D, or even manufacturing can. Going on, authorities have also released policies to promote financial support for select property developers, while many local governments, though not necessarily the largest cities, have significantly relaxed home purchase restrictions. Real estate's drag to moderate. KKR expects a modest slowdown in China's GDP growth to 4.7 this year and 4.5 next, with real estate and COVID-related factors having the drag on the economy from 1.4 percentage points in 2024 to a 0.7 percentage point drag in 2025. Our bottom line is that, with the ongoing correction as well as some potential further policy support, we think the drag to the overall economy should moderate a bit over the next few years, McVeigh said in a separate statement. He's the chief investment officer of KKR balance sheet. Going on here, KKR said most of its local portfolios and consumers and services companies whose business reflect how Chinese people in the middle to higher income range are spending modestly to upgrade their lifestyles. Top line growth is solid, margins are holding, and consumers are spending on less conspicuous items such as smart homes, pets, and recreational activity. Domestic travel is also strong. Longer term, KKR still expects that China can follow historical precedent in changing policy to be more investor friendly. I'd have to say the jury's still out on that, because that does not seem to be the direction Xi has been going of late, though there is always the opportunity to pivot, especially as things become more difficult. In the article, quote, while our message is not an all-clear signal to lean in, the report said it is a reminder, using history as a guide, that if China does adjust its domestic policies to be more investor-friendly, especially as it relates to supply-side reforms, this market could rebound significantly from current levels. Just caution, there's a few ifs if China does adjust its domestic policies. And I would also throw in an if there. if it relates to more supply side reforms, deregulating the economy. Um, we will see. So far, the direction of China recently has been in this direction of more, not less regulation, pretty much the opposite of what this is urging. Anyhow, hope you enjoyed the article. If you did, give it a thumbs up. If you have not already, subscribed to hear more real estate news. Thanks a lot.